In this video we will talk about Cleveland-Cliffs Inc. And you can see that prediction at the end of this year close to 100% performance, and I think it is amazing. Here you can see the model and green line super close to real price. Now we have average price to sales 0.9, price to sales right now 0.4. Extremely high CAGR because in 2021 they book over $20 billion in revenue. In 2020 it was only $5.2 billion. Really nice growth number. But in my model I will use 0.9 as average and expected growth only 5%. And you will know why. In 2021 they acting really interesting, and Guru Focus will use this stock really high, but on the other side we have over $5 billion in debt, and in 1 quarter now they generate over 1 billion. Maybe it is not a problem for this company. Analyst estimates not really good for 2023, but from my point of view I think even CEO of Cleveland-Cliffs don't know what it will be in 2023, because we have a super complicated world right now, and if interest rates will be like 8, it will be one world, or everything will be okay and interest rate will be over 1%, and lots of people will use steel in the United States to build everything. I think this slide very important because Cliffs now covers the entire steel life cycle. Flat rolled going to manufacturers, then Cliffs receives OEM scrap offtake, then process it, and they can sell it to a third party or make flat rolled again. It is quite interesting. It is a 10K report, and you can see that it is over 400 pages and it is mind-blowing. With strong demand and steel prices in the United States reaching all-time highs in 2021, we were well positioned to negotiate our fixed price contracts, which represent approximately 45% of our volumes at favorable levels, which should be enable us to deliver strong financial results and free cash flow in 2022. And you have to understand that 45% on a long-term basis, it is awesome. That is why we can expect prices a little bit higher than in 2021 in 2022. Revenues by market. Automotive was 45% in 2020, but now it is only 25%, and it is awesome because infrastructure and manufacturing plus some distributors. I prefer this percentage by markets than 45% in automotive. Our steel is typically sold to the market on a spot basis or under short-term contracts linked to steel pricing index. A long-term debt not really high, $5.3 billion, but minimum take or pay push commitments over 8.5, and I think they know how to do their business. Probably we will see a strong year in 2022. I think it will be close to $20 billion again in revenue, plus minus. And here you can see the answer why this stock really correlate with the interest rate, because you can buy bonds or senior notes for 9% for Cleveland-Cliffs, and it is quite high. If they wouldn't pay their debt in the next 2 years, I think it will be really hard for them to borrow money, because it will be super painful. If we will see interest rate over 8, it means that they will have to borrow for 15 or 16%, and it is quite scary. If we will check this company on a Coifin, you can see that the same levels of market cap were in 2011 or 2008. Not a super wonderful stock that I want to buy right now, and I think I will just downgrade it to normal numbers. If I will use 0.4 in price to sales, we can see 17 and 18, and I think it is absolutely okay for this model. If you want to add something on Cleveland Cliffs, please write down your thoughts in the comment section. I think this stock absolutely not interesting for me, even with $1 billion in buyback. It is not worth of my time. Bye bye.